Asia Pacific is said to be driving the global recovery at this point in time. If that is indeed the case, do you foresee the foreign funds being relocated to this part of the world and Malaysia being one of the beneficiaries? I'm talking about property, of course. Jared?
I think we're certainly seeing very recently that where the prices are correct in terms of the values. We have in one case with one of our agents where a purchaser is looking at purchasing en bloc. So that's a really positive sign that when the value is there, foreign funds are definitely still very attracted to KLCC as a market, but only on the proviso that the figures stack up in terms of yields, in terms of potential growth. That's a very critical point.
Well, I suppose the jury is still out as to whether the economic recovery can be sustained. You know, I think all of us would have read that just recently, Singapore government is trying to cool the property market, by instituting quite a lot of changes to the scenario. This being the case, would, for instance, you know, if one of our neighbors were to falter, and indeed Singapore were to go into a double-dip recession, as some people have predicted, would that not impact negatively on us as well?
The KLCC market is always compared to the regional market, but again, it's also an independent market altogether. So by looking at our number of profile of customer, as well as the buyer currently, I think they are there to hold for long term, not so much speculative anymore as compared to the initial stage prior to 2008, where the RBGT just removed, you know. So most people come in to speculate, you know. So it's a different market now, and they are more for holding for long term because of the low interest rate, the yield part, you know. All this.
Sure, but you know, what kind of yields are the buyers getting now?
At the rate of 4 to 5% return, still better than your FD rate. When we are talking about FD rate, Malaysia we are talking about 2%. In Singapore we are talking about 0.45 to 0.85. Hong Kong 0.2 to 0.25%. So for your investment, well, on the loan side, Malaysia you're talking about 3.2 to 4%. Still more than enough to cover your loan.
Right. It's still, so it is still a better option. Property.
I guess with a lot of the sellers who have had bought the properties from the peak time, they always ask themselves the question, if I were to offload the property right now and put it into FD, that's not going to perform better. So I'm just going to hang on to it and try and get some rental returns in the meantime. And KLCC in itself is a very attractive position, location. It's land scarcity, as with big cities, Singapore, you got Orchard Road, Sydney, you got the Opera House, it's iconic.
I think if you compare to a few years ago, purchaser will be expecting 7-8% kind of returns, you know. Now, I think they all have accepted the fact that with such low fixed interest deposit, as you see in Malaysia or in the region, and if they can get about 4-5%, they are more than happy. And even if it's slightly lower, with the prospect of capital appreciation, they still think that property is a better option than even share market or other instruments of financial instruments.
I tend to agree with you, but I think the word here is if, because we are not even sure of the rate of occupancy of the condominiums in KLCC. What if you don't get a tenant?
Yeah, that is of course the nagging problem because of the supply situation at the moment. I think, for example, last year itself, there were 6,000 units in the market that was ready. And if you take a drive at night in some of those, I think one of the best indicators is you take a knife and drive.
So dark.
You don't see the light, very much of the light. Then that's not a very good sign. That same problem may not be as severe in other areas like in Hong Kong and Singapore, because they do get although Singapore also lost a lot of expatriate because of the this crisis in the third and fourth quarter of 2008, but I think they still are able to retain quite a number of expatriate, and also they continue to attract the expatriate population into Singapore, back into Singapore. Yeah.
So the question would be, would the current prices actually are they realistic measured against the yields that are being presented? Because I think that's also a very important component of any property investment, right? You look at yields, you look at capital appreciation as well.
I think
so are the prices realistic? Yeah,
I think if you look at it positively, definitely people have confidence that it will be able to maintain at least, at this level, and that gives them the confidence that to come back again into the Malaysian property market.
Right. Yeah. All said and done, I think what the question that's before us now is it time to invest in KLCC properties? Maybe I should go, round with the gentlemen, starting with you, Vincent. Is it time, and would you put your money in KLCC?
Yes, I would, but I would be very selective of the project and the particular receptiveness of the particular condominium. There is the differentiation of market. There are obviously there are projects within the KLCC area which are better managed, better run, and more attract a certain design that attract people, and especially those who have very good views. I think so one reason or another, they are always looking for views. 360-degree view if possible.
Right, okay. And Gerald?
Certainly, I think KLCC in the long term would give great prospects. Certainly, I think it is the time to look at the KLCC market again. Comparing to what it was at its peak and what it is today is really good value. And if you look at it as a long-term investment, you will certainly reap great rewards. But in saying that, I agree with Vincent also, it's the product type you've got to pick.
Sure.
You look at something, say a smaller unit would generally give you much better returns, easier to dispose of as well. But in saying that, if you go for something really unique and really large size, but it's got to be really unique, that would stand very well in the tough times.
So it has got to have a unique...
It's got a unique factor.
When you say long term, your definition would be like what kind of...
3-5 years.
3-5 years,
yes.
minimum?
Yes.
Okay. And Gok Lu, would you put your money in KLCC?
Yep, selectively. I will be very selective in terms of choosing the product. Surprisingly, there's some projects that are very high occupancy rate, above 50%. Of course, if you look into the overall, the occupancy rate is quite low. But if you look to selectively, certain projects have come into the market earlier, or certain projects have certain features like very close to the shopping area, they are doing very well. And the small size unit also doing very well. So I will, if given a choice, I will put my money into the smaller unit.
Okay, you go for the smaller unit.
Yep.
And when you say smaller unit, how small is small?
Can be a studio to 1,000 over square feet.
So these have a better chance of being tenanted?
Yes, because of the total sum invested also lesser, and rental in total sum also lesser.
Yeah.
I think that has always that's important to that it mustn't be too big, because in the last few years, of course, suddenly developers are building not 1,000 square feet but 3,000, 5,000, 4,000 square feet of condominium that runs into quite a few millions and becomes a problem. Right. If you look at the reason, what has confirmed the market, both the size as well as just firming up the price, was the recent launch of one of the projects that I'm sure all of you are aware. It has been a sellout, even pricing at $800 over per square feet, those smaller units. It is almost gone within days, which is a very good indicator that, and that is not even, well, of course I believe when this fully built, the higher floor can see KLCC fully.
Again, views, yeah.
Yes.
Yeah. Okay, gentlemen, I'm afraid that's all the time we have today, and thank you very much for your participation. Do drop us a line on your comments or suggestions. We would love to hear from you. So till next time, have a productive day. Bye-bye.